So guys, as the reaction was so good on the other backtest with me video, you guys seem to like it. You said you got a lot of value from the video. I'm going to backtest another currency pair, talk you through why I'm executing trades, my thought process. And yeah, I hope you guys get value, enjoy it. If you do, make sure you like and subscribe. We're on the road to 1,000 subscribers. We're getting very close. So I'd appreciate any support. And yeah, let's get into the video. Backtesting Euro JPY. I'm going to try and find some trades, talk you through them. I'm still learning about this strategy. I'm not doing it on my funded accounts at the minute, or my valuation phase of my funded accounts. I'm not doing that at the minute, but the data I've got on the previous currency pairs has been good, so I was going to backtest anyway, so I may as well film it, and if any of you guys get value from it, then that'll be a bonus. Make sure you like and subscribe if you do. And yeah, let's get into it. Pretty much what I'm looking for. Again, overextended runs. So obviously this is the 50 moving average, 50 EMA. If we're overextended from this area and we come to a key level, then I'll be looking for opportunities to short. Likewise, if we're overextended to the downside at a key level, we'll look to bounce from that area. And then we also look for the trend continuations, looking for long. So yeah, I'll break down some examples if we get some, and yeah, let's see. So my main thought process right now would be waiting for a pullback. So the areas I'd be looking at is here. I'd be waiting for a pullback because we're in an upward trend, clearly in an upward trend, higher highs, higher lows. So you could look for the pullback, but this looks to already be gone. So I'm going to look for this pullback, continuation, and then I'll scale into the lower time frames once we're at this area of value to see if we get an entry. So yeah, let's fast forward and see if we get this. Okay, we're at that level. Okay, here we go. Now we're rejecting it. We are rejecting this level in the 50 EMA. So now I'd go into the 2-minute time frame. And I want to look for a trend change. We might have already got this. Something like that. Breakout, retest. We use the Fibonacci retracement and Fibonacci extension for our targets. So we've come to this level, which is on the hourly. We're now broken out, higher high made. We're in a downward trend initially. We've broken out higher high. Let's just draw this. So we're in a downward trend. Now broken out higher high, I want to be looking to enter around here. I think we might have missed this entry, but and then target either here or here. That's the play. So the entry would be here. Stop loss there. Let me get rid of this. And target. I want at least a 1 to 2. Yeah, so we get a 1 to 2. We can go to this 1.618 level. So that would be the maximum target. But I'd also, the more likely outcome is the rejection of this level. So I don't want to push it too far. So let's see. Okay, we're popping. Okay, there we go. Perfect. So that was 2.78%. If we've decelerated at this level, I would have looked to take out 90% of profit. Or 90% of profit, and then move to break even. So very simple trade, and I'm just waiting now. So next, and this is how simple trading can be. I'm just waiting for an opportunity. So now the next key level where we've bounced from is this 156.615 level. We could reject these highs too, because this strategy is very short term. You don't really, there's quite a few opportunities you can get. So let's see. We're still in an upward trend. Again, if we pull back to the 50 EMA right here, we could look for an opportunity. Let's scale in and see if we can get an opportunity. We might not be able to because the trend on these time frames might not have changed. So we're just still in a downward trend. Okay, we're broken out on this. What's this hourly saying? So the hourly, we're below the 50 EMA. That's the problem. That's the negative. We're still in an upward trend, making higher highs, higher lows. So it could be viable. Depends how this looks. What's the time? Yeah, 11:50. So we've broken out of these areas. We've sort of consolidated after being in a downward trend, broken out past these highs. So now we'd look for the pullback move. Once we've broken out, we want to wait for the retest, which would be at the 38.0.382 Fibonacci level. And then obviously draw our extension levels so we can target. So once we've got the pullback, see if we get a pullback, if we get bullish momentum come into the market like that. So we'd enter, we're a bit far away, enter there, stop at the 0.786 target, want at least a 1 to 2. Obviously, like I said, see how it reacts at the 1.272 level. And we know the risks of this trade because of the, there we go, so stopped out on that one. Yeah, the risks, as you can see, this is why it's good to backtest, so you can see we were broke below the 1 hour 50, so it's negative. It's a negative confluence. So in hindsight, you could think, should I take that trade? Should I not? But the fact that we have good risk reward like this one, 2.78, that's why risk reward's so important, because once you've got high risk reward, it allows you a few losses. You know, if I have 4 losses in a row, I'm down 4%. But if I can get at least 2 to 1 on the trades, I need to win 2 back to back to be back at break even. So, and 4 losses, although it can happen, it's not a regular thing. I mean, it can happen. I've had 4 losses. I've had 6 losses in a row. But by having good risk reward, you can bring it back. Okay, it's getting a little bit messy. Let's just take some of this off and draw out our levels. So what we want to look for? Okay, reversal up here. That's nice. So let's scale into this lower time frames and see if we get a breakdown. We're at this level, we're overextended, want to look for a pullback. Okay, we've broken out below here, which is nice. It's not massively clean though, if you look, because this level here, we haven't clearly broken down. That's the negative. We haven't broken out, then pulled back. We've sort of subtly broke down. So that's the negatives. Would it warrant taking the trade? There would be an entry here. A stop. Stop would be again at the 0.786. Extension level would be here. Again, easily a 1 to 3 that trade, so a nice risk reward. Like I said, the negative, and I actually probably wouldn't take this trade with live capital, just because look, we haven't clearly broken out. These could be fake outs to go higher, so that's what you've got to be careful of. I'd rather wait for a breakdown, so let's just get rid of this. It might play out. I'd want to wait for a clearer breakdown of this level, and it would have gone against us. But look, you can see we're not clearly breaking out, clearly making a new lower low. We're subtly breaking it, bouncing, we're faking out, which we're in an upward trend at this point on this hourly. So you have to be careful with that. I'll do a couple more examples. I don't want to make the video too long. But okay, look, you can see here, nice key level where we bounced off before. Let's see how we react at this level. We can break down, get a nice clear breakdown. That's not too bad. Is it lining up with our 38.2 fib? No, we need to break down a little bit more. Okay, now maybe if we break down from here, though it is rolling in our direction. Now we could be too far away from the, okay, potentially, although with these trades they're not as nice because the move sort of already happened. If you think, if we're putting our stop here, so if we entered here, bearish momentum coming in, stop there, target here, although the risk reward, everything's nice except from the fact that if we'd have entered up here, let's say here, stop here, we're protected more because we're a higher price. We could pull back here before selling off, but here at least we're getting in at a better price. but nothing too wrong with that trade. Okay, rolling off. How are we going to manage this? We're over halfway to target. Pulling back, obviously. See if we continue breaking down. If we fail to break this low, if we break back above this, I would probably just move this to break even, to be honest. Let's have a break even trade. Because I would say if we break back above this high, we'll get out. But at that point, we'd only be at, well, it'd be 0.5. So we'd probably have our stop just a break even. And yeah, just break even the trade. Are we reversing? Oh. We'd still be in just about. Let's see if we get some sellers coming. Or are we going to hit break even? Yeah, I think we would have been took out there. So that would have been break even trade. Again, you can look to manage this. If this goes and hits target, you can then assess through your back testing, what would I have done differently, what would I have done the same. But yeah, okay, I'll do one more trade. That was a break even, remember that. How many have we done? 3. So that was, oh no, we've done more, I think. No, 2.78, negative 1, 1.78, and then break even. So only a few trades. Okay, let's see what we're saying. Breaking down retest. Okay, if we get a rejection at this level, we'll look for the continuation short because we've broken. Reason why is because we've broken down on the hourly, lower low, lower high. We're now in a downward trend. We're back at an area of value. We want to look for the continuation to the downside. Entry could have been here. Actually, that's 5 in the morning. I don't think I'd be trading that time anyway. We'll wait for London to open around 8 o'clock. That's when the momentum comes in. Breakdown. No. So no entry. Go back up at these highs. Let's see if we get a short because we're overextended. Need a clear breakdown. Clear breakdown. Yeah. Retest. Okay, back up at these levels, see if we get bearish momentum come in. Something like that's nice enough. Is this correct? Yep. Extension level. So we broke down retest. These lower time frames have changed. Bearish momentum. Stop there. 1 to 3. See. And that would have stopped us out. So yeah, you just got to keep going through this data. From my testing, it has been very profitable. Obviously, in this case, we had 2 losses and a break even and 1 win. So if we could have managed this trade differently, let's say we manage this differently. You know, maybe let's say you didn't move that to break even at that point and you just allowed this to play out. That's why it's interesting to get your risk management. You have to manage your trades. It's one thing executing and entering trades, but you have to understand your management, because I said I'd move to break even. I got tagged out for break even, but it would have gone for a 2.63%. So your results can vastly be different each month based on how you manage, because let's say I got stopped out for break even. So this month I would have made, well, it wouldn't be a full month, we've only done a couple of days, but 2.78%, negative 1%, so that's 1.78, negative 1% because we lost on that one, that's 0.78%. But let's say we got this for a full 2.63, not a break even, we would be up about 3.4% for that month so far. But just by managing this wrong, or not wrong, but, you know, moving to break even, getting tagged out, we would actually be up just under 1%. So it's a lesson for you guys and a lesson for myself that you have to manage your risk. Know one thing is about entering, know how to enter what you're looking for. And another thing is management, because if you don't manage properly, like as we've seen here, it can change your month from being point plus. We're still not bad, just under 1%. And like I said, it's not a full month. What day is that? It is 17th to the 21st. So just about a week's worth of data, 1%, not too bad. But again, that could have been 3%. So yeah, interesting. If you guys like this video, let me know in the comments, and I'll make more of them. I enjoy making them. It's interesting. You can learn a lot. And obviously I'm back testing anyway, so it's convenient for me to film, and if people get value, it's a bonus. And yeah, I'll catch you guys in the next video. Thanks for watching, guys.